All right, good afternoon, everyone. It is Friday, the 19th of May, and I think today we are coming to you very, very live. We're going to do something a little bit different today. We're going to do I guess, a live on the spot session with the one and only Mr. Robbie Bobolowski. I think he's with us. Rob, you here?
I don't know if I'm with you, but I am
Yeah.
here. All right. What are we doing? Are we going to have a quick chat about my dollar yen scenario?
Yeah, let's go dollar yen, and
Can I
then
see my
we'll talk
screen?
about these equities.
All right. Fantastic. So look, there's really not much going on today, by the way. I mean, I know we had a bit of a move down yesterday. Sorry, the day before. But some numbers are coming out, but there's nothing calendar-wise, if you want to call it. So it's a bit of a blur. But I was talking before about I think last week I was talking about how the dollar yen needs to break through this upper level. It didn't really get up there, and we piled off pretty much straight after that. And the other day, when the possible Trump impeachment sort of kicked in with all these leaked emails, we had a bit of a move down on all the markets, a little bit of uncertainty, and there was a few things that actually happened. And I think Ali and I are going to. We decided, it was quite funny. We said to ourselves, how we're going to do today. And Ali goes, "Why don't I just ask you some questions and you answer them?" And I said, "Well, what are the questions?" He goes, "No, I'm going to do them live on air." And I said, "All right, cool. Like that, you'll put me on the spot." So I reckon we do that. Look, from my end, I'll just quickly run through the dollar yen. I reckon the key level is definitely up here, which was about that 114.88. So we break that, and then we'll definitely see some serious moves to the upside. And you can see here the ranges that I keep on talking about come straight back up into this area. To the downside, I mean, there's two little downside moves here you can see, even though it's a big one here. But if you go for a smaller one, I'll just bring that in. I'll just try and work out how to change these colors. Ellie's much better at that than I am. But you can see here, there's two of these moves. And that one will come straight back into this line here, which is that 108.71. It's quite funny how those ranges sort of keep on coming up. So you can take them with a grain of salt, or you can start buying when it gets down to 108.703, if it does, unless tonight they buy up this market and get past that 112.70. 78 again. So we'll see how we go. Other than that, I really don't have much more to say. So I'm probably going to we'll share some of Ellie's screens while we ask some questions.
Yeah, let's do it. All right. Look, I mean, I wanted to talk about the S&P first and foremost, because I think everyone saw a couple of nights ago that we had Trump come out, said some stuff, and I mean, look, who really cares? What's going on? But I think the big thing is what's going to happen to these markets, and like we've said all along, we don't think anything has changed. Everything is still, I think, the same. Nothing is really, in the bigger picture, nothing has really changed. But one thing we were just talking about before we went live on live TV was actually the volume, and I think Rob brought up something pretty interesting. So let me actually show you what I'm talking about. I've got some snaps here. Bring these up right now. So we were looking at the S&P volume a couple of nights ago, and we had there were obviously two markets that we're looking at. I think you can see my screen here. So this is the SPY, which is one of the major S&P ETFs around the world, and then we've got here the S&P futures. And the interesting thing that we found was there wasn't a lot of volume. We don't speak about volume too much, but I want to bring this up, and I think Rob might be able to tell you a little bit more in more detail. We didn't see a lot of volume. Volume was pretty thin on the futures, but on the SPY we had some pretty big volume. I mean, I think I'll let you guys figure out what big volume means. But Rob raised an interesting point.
Do you want me to clarify?
Yeah,
Yeah.
please.
Okay, so working on the market making desk, I'm probably going to sort of put that sort of mentality, try and explain it to you guys in a simple way. When they trade an ETF, what they do is they need to offset it against something. So the ETF is an exchange traded product, but it's based off something. So the SPY is actually based off the SPY, right? And what the market makers will do is that market make this ETF will have to offset the trades. So effectively, what I see here is quite simply the market makers not taking on the flow. They took on the flow and they didn't hedge it. Okay, so when they saw no real volume in the futures, right, and they probably thought this was a bit, up in the air, with Trump, because nothing's really changed.
So what are we
So
saying here, Robert? We're saying they took
So
on the flow in
they
the
took on the
SPY,
flow.
but they didn't hedge in futures.
That is correct. So they took on all that flow, all these people shorting, right, in the SPY, and then in the futures, if you look at the futures, there was no volume, so they didn't hedge it, or they didn't go back to hedge it. So therefore, what they've done is they've made all that money on the way back up, and all the people that were short got smashed. And that's pretty much how market making works. So without blaming market makers, they're a lot smarter than us. I'll be brutally honest. That is what market makers do. They make decisions based on flow. And if the flow is heavy to one direction on a certain market, but it's not on another market, they will take on that flow. And look what happened the next day. Pop, pop, pop. Market makers made all this money. People trading the SPY short didn't.
Yeah, and we were saying that as well. Watch out for a short squeeze.
Yeah, you got to be cautious with stuff like this. I mean, the question you have to ask yourself is, I mean, I understand, technicals and that, and we automated systems. We do allow them to run on stuff like this. They'll run short, they'll run long. But the other thing is, what's changed? Nothing's changed. Even if Trump gets impeached, right, he can still be president.
So, my next question.
Oh, I see. Now, I'm going to tell you guys right now, for everyone that's listening, I actually don't know what these questions are. And we wanted to do it that way because, well, see how I get stumped.
Yeah, this is super live. This is real live. We haven't spoken before. My next question.
Yeah, the reason why we didn't speak is because Ali turned up just about 5 minutes ago.
Yeah, life's tough as a trader, guys. When you're up all night. Sorry. All right. My next question. Emerging markets. Emerging markets been smashed this week. Brazil is down like 10%. India smashed. Are they going to hold up global markets if they continue to get smashed?
I think in a way they might, but look, emerging markets, they're in trouble, right? Because no one wants to be involved in them. So the flow will probably end up, they were the love child, if you want to call it, for a little bit. People were getting involved in emerging markets, and now they need to get out of them because the emerging markets aren't performing. So what they need to do is they need to find somewhere to put that money. So let me ask you guys a question. Same thing as what they did with the S&P, right? It's the best, worst market in the world.
Best house in a bad neighborhood.
Best house in the worst neighborhood possible. And the emerging market stocks are getting pulverized because the big boys don't want to stay in these countries. They need to find a new home for their money.
Makes sense.
And where's that new home, boys and girls? Anyone? Bitcoin.
All right.
Next question.
Next question. The Fed, are they sleeping?
Yeah.
Are they sleeping on interest rates?
Mate, they're gone.
when they're gone? What does that mean?
They're not awake. Like you said it right. They are asleep. They really don't know what to do. I mean, they're in a situation now where they just really don't know what to do. And no disrespect to Janet Yellen, she's probably a very, very smart person when it comes to doing something. But when it comes to doing this, she's got no idea.
Yeah.
So
Yeah.
I don't know what she's good at, but it's not this.
Yeah. Yeah. And look, I mean, the reason we're asking this, guys, is because, you know, I'm curious about Rob's thoughts, but I'm also trying to paint a picture with what happened this week. If these, on a day like this, you know, when we're down like 2%, if these markets don't follow through, basically what the market's saying is they're getting smacked and they're being bought back up and they're not going anywhere. And when you see something like this, that means get ready for potentially something much, much bigger. Yeah, something much, much bigger going on.
Actually, there was an article. I don't know if people have seen it, and I'll try and share it with everyone. Actually, I'll try and find it because I think I still had it up on my. I very rarely close my tabs. Let me try and. I'll try and locate it. It was actually by Ray.
You talking about Dahlia?
Yes, it was on LinkedIn. I'm going to send it. Effectively, what he's saying is, actually, I'll send it off to everyone on the live chat. He's basically saying that the markets have got a big problem long term, but short term's fine. So he reckons for about 2 years, this market's going to continue higher. And that pretty much is in line with, I don't know how to put this, but that's in line with Trump. So Trump will be president for 3 years. The markets will just keep on going up. That's what Ray Dalio. Now, remember, Ray Dalio he's the chairman of the largest hedge fund in the world, Bridgewater. Okay, so you might have to listen to him if you're not going to listen to me. I said this ages ago. Trump will make these markets go higher, whether we like it or not. You know, one of the guys here, Eddie, was saying that he's an arrogant prick. You know what? He is. But that doesn't make him not. That doesn't make it the fact that he might actually push these markets higher, right? And then once he's out of his, I think I said this ages ago when he got elected, this guy's going to make the markets roof it, and then he's going to turn around because what is he now, 70?
71, yeah.
71. He's not going to run again. He won't run again. I'm telling you now, he's going to make these markets go higher. His aides are going to say, Donald, it's time for you to retire. Give the reins to someone else. And then, yeah, go on.
You reckon he won't run again?
I don't reckon he will. If these markets fly past 3,000, I reckon he's going to put his hands up and go, you know what, guys, thank you very much for your time. I'm going to spend time with my lovely wife and my children. And then guess what's going to happen to the markets? They're going to correct.
Maybe.
That's my theory.
They said that about Reagan though too. He was 70 or 69. And he went 8 years as well. I reckon Trump's he's not going to want to let go of power.
Yeah, but Trump's not. You got to remember, Trump is a businessman. He's not stupid. He knows when the time's up. Okay, he will know because he sees everything. Correct?
Yeah.
Right. So he sees all the figures, and as this US debt keeps on rising, is he stupid enough to go for another year if the markets finish on a high in his term? Do you really think that? Seriously?
Well, he's not George Bush. Let's put it that way.
Well, let's bring up George Costanza. Forget about George Bush. George Costanza walks into a meeting, cracks a joke, everyone laughs, and he says he's done, right? He leaves on a high. I actually reckon that Trump is going to do exactly the same thing. He's going to leave on a high because he's not stupid enough with the debt the way it is in the US. You know, plenty of ninja loans still going around, and the markets aren't getting any better.
Let's just hope he doesn't do an opposite George on us.
What's that?
George Costanza. You've seen opposite George? You've seen opposite George?
Oh, the opposite George. No, don't worry about that.
All right. Anyway.
Another question.
Another question. Well, look, I want to, I guess, give some technical backdrop on that. And that is, look, this is a really simple technique you guys can automate, you guys can build, you guys can look into. But basically, and I won't spend too much time on this. If we look at all these bull markets, so this was the big 90s bull market. Sorry, I should have done that like that. If you look at all these bull markets, you see that they actually change in the momentum changes as they move and as they advance. And we've seen that, you know, the momentum in this market has changed this year, and you can see the slope or the rate at which it's advancing. And you know, we haven't seen any kind of volatility that you generally see, you know, at big tops or you know, at a big event, I should say. You know, we haven't seen that since, you know, 2015 when we had this big corrective area. So nothing's changed, guys. This is all short term. Don't get caught up in the day-to-day stuff. This is all, you know,
Push that
short-term
range
stuff.
up. Push that, you know, from that second one that you had down. Go
Which
down.
one?
That's it. From there.
This one.
From the low there, just a little bit higher. Lower. Sorry.
This one.
No, that one, the first one. That's it there. From
Yeah.
there to the highs. To the highs, yeah. And now extend them from the next low all the way up. Where are we at? Holy moly, where are we? 31.52.
I actually can't get there. It's off
You
the
can't get
charts.
there?
It's off the charts, ladies.
It's over 3,000. 31.52. I'm
I'll tell
telling
you
you,
exactly
Juma.
where it is. It's about 28.65.
Oh, okay. Well, I say 31.52.
Yeah,
But that's the next range.
You might not be far off with this.
That is the next range, right? Let's call it 28. Let's call it that one there. Right?
You might not be far off.
32.59. Mate, I'm telling you, we are not far off that 31.52. That is the next range. Right? And according to that article, right, that we wrote, do you remember the name of that article?
Yeah, Are You a Bull or Bear? August.
Are you a bull or bear? When?
We wrote it in August 2015. We wrote it right here when
Correct.
we were all throughout here.
Correct.
This period here.
Correct.
And everyone thought the market was topping it and it was going to collapse.
Yep. But the next move is 31.52, and I'm going to stick to that until I'm proven wrong.
I can't disagree.
You did for a while.
A little bit. I was on the fence.
Yeah.
I was on the fence.
But look at the range. I mean, this is something that everyone needs to look at. You know what Ali's talking about, the slopes and the way the markets move. There is a massive range. Even if we get, so you know how I showed you before the first move, right? It brought us up to around 2,800, right? That might be where it stops
for a period of time. Yeah.
For a period of time. That's right. That move there, but then the bigger move, right, will end up at 31.52 ish. Or even 32.59. Let's call it 32.59, a slight overextension through that 31.52, and then we're done.
Yeah.
So, and that's pretty much in line with, you know, even like Ray Dalio, what he's talking about, 2 years. Is that going to take 2 years to get there? Probably. Might even be quicker than that.
Yeah.
Anyway,
I think so.
Sorry, that's my little 2 cents. Any more questions? Look, hey guys, for everyone that's listening, I really don't know how many questions he's got, and I don't even know what the questions are. So that's why I'm asking. Any more questions?
Yeah, I've got a couple.
Go.
When are the kebabs coming?
It's stuck on Punt Road, man.
No, look, I guess I think you know, like Rob was saying, you know, there's a lot of stuff in motion at the moment, and you know, I think if you haven't got any kind of clue of the bigger picture or what's going on, you know, you might be left behind. We're talking this week about, you know, buying these indices. You know, we actually went in on a couple of positions yesterday, very low. We're just testing these markets just to see, you know, so S&P and the ASX and the Nikkei and the Nasdaq. We're going to see if that low can hold, you know, so pretty much yesterday's low. We do have some downside targets that come into this 35 area on the S&P. And then there is also worthwhile noting that we have potential gap fills on the downside on the Nasdaq still to come, and the DAX. So it comes in a little bit lower, down at about that 5,500, and then on the DAX. So, I mean, look, keep in mind that it is possible. We saw some gap fills on the S&P, and we're not too far away off on the dollar yen, I think, as well. So, this 12,200 area on the DAX, I think it's a fantastic buying opportunity if we get down there. But don't be surprised if
Hey guys,
these
just
markets
quickly,
just rally.
I'm gonna do a screenshot of one of the trades the systems took last night.
Yeah.
So just give me a second. It was you're not gonna like this. 2347.2 closed out at 2367.9.
Nice.
Wait, let me get the screenshot. I'll bring it for you guys. 1 second.
He's showing off now, boys and girls. All right. Anyway, but I mean, like we said, get ready. This could be another fantastic buying opportunity in the indices, in the US dollar. Gold's a little bit interesting. I think gold can rally with these markets if there's a lot of uncertainty. If there's still a lot of uncertainty and the markets are just kind of slowly grinding higher, gold can rally. Especially if there's a lack of confidence. Look, any lack in confidence in the government, gold's going to rally, because that's a flight risk, so to speak. So if there's more bad news about Trump, expect gold to rally over the coming week. But I think the old saying goes, until Rob gets his screenshot, when all the bad news is on the table and the markets aren't going down, there's only one way for them to go, and that's up. The ASX, we like the ASX too. ASX is at a really, really nice double bottom area. Doesn't take a genius to figure it out, guys. Bye. That's not advice, I'm just saying. That's pretty much it from us. I think a few people have been talking about, here's one for you, Robbie. Oil. More basic.
Give me 1 second.
Oh, okay.
Oh, no, I'm just trying to get the screenshot from another PC, put it on the drive, and then bring it over.
All right. Well,
you want to talk about oil?
I'll talk about oil quickly, and then you can tell me. Look, oil. We're coming into this key range again on the daily, so keep an eye out for that 50 area. It's really up at about 50-50. But keep an eye. It's a very, very, very big level on oil. You can see that all the way through there. We'll look to short oil there if we get back up into it. And again, this is all part of a bigger basing pattern in oil. And look, I think, I don't know what Rob thinks, but I think we could see a pretty big move up in oil, back up to $90.
Yeah. Oh, look, oil's shaping up. If this market flies again to the upside, oil's gonna chase it.
It's almost the perfect storm, huh?
Yeah, it's going to chase it, seriously, because people will start buying. Even though I know electric cars are coming and all that kind of stuff, but look, people still need, in a lot of the third world countries, we were talking about this the other day about how economies of scale are changing in some of these small countries that didn't have money before. Now they've got a little bit of money, right? Even though people are pulling out of stocks in the emerging markets, some of those people that have made a lot of money in those emerging markets, right? And now they're starting to get, gas heaters and all that kind of stuff. So the shift is starting. So they're all starting to make a little bit of money, and they're going to start buying more oil because they've never had any money to buy it in the first place. So give me a few more seconds and I'll find this screenshot.
All right. What else is happening? Okay, euro. Let me talk about the euro. Because I've actually been hit on this market this week, and that's just the way trading goes. So, like you guys, we do have losses as well. So we've been trying to short this market this week. And when I say short this market, I mean net short this market. So we have taken longs to the upside as well. But I've had a short perspective on the euro, and look, we mentioned ages ago that if the euro kind of breaks these lows, then it's going to get really nasty, and Rob's been saying all along that the euro's fine and there's nothing wrong with the euro, and it looks like we're actually seeing that. I'm still not sure about this market. I'm still not sure whether we go much higher from here. I think a lot of it depends on the US dollar. But it's been a pretty strong move by the euro this week, and I think yesterday's outside bar, or yesterday's day, means slow down.
Yeah, chuck it on my screen.
Chuck it on your screen. Okay.
Yep.
Go.
There's no weather information for St.
Shut up, fucking zero.
I heard that.
Oh, sorry.
Are you on my screen now?
Yeah, I can see.
Okay, there you go.
47, 67. Looks like Photoshop to me. Nice grade. Killer.
Mate, no, that's that was one of the trades. There's quite a few other trades, but that was one of the better ones. And
It's as good as it gets.
yeah, so this is when automation really kicks in, guys. You define the rules, you get it right, and they just nail it. I mean, you know, we took a couple of hits here and there, but some of the really good trades sort of, you know, I mean, that's literally 20 points on the S&P. You know, it's a good move. So anyway, that's one of the good trades. So all good. That's pretty much all I got. Have you got any more questions, G-Man?
I think that's all I got. Otherwise,
All
I
right.
can go all day.
Cool. All right, we'll let everyone get back to it, and we'll try and post something exciting today, but I don't know what's going on. Nothing at the moment, so see how we go.
All right.
Okay.
Thanks, guys.
Great. Have a good one.
Thanks.
Bye.
Bye.